What is going on, my friends? It's great to see you guys. My name is Ryan Williams, and one of the things that I love most about dividend investing is that for the most part, the strategy is just to buy these stocks, and once you hold them, you keep them forever. It's a very simple strategy that doesn't require a whole bunch of turnover, and the reason it's possible is because you're investing in strong, reputable companies, just like the ones we're talking about today. And that brings me to the topic of this video. Today, guys, we are going to be talking about the best dividend stocks that you can buy and hold forever. Investing in these stocks will help bring in consistent cash flow, and you can also rest assured that your investment is safe. For the most part, at least, guys. I mean, there's always going to be risk in any sort of investment you make. Don't forget that. But the companies in today's video have proven themselves, at least in my opinion, to be reliable investments, which we'll get into momentarily. And before we get rocking and rolling, if you guys wouldn't mind doing me just the smallest favor and go ahead and give this video a big thumbs up. Anyway, guys, thank you so much for liking this video. I really appreciate it. And now, without further ado, let's get into it. All right, guys, now before we get into any of these stocks, there's just one little housekeeping item I want to take care of. As you guys can most definitely notice if you've seen my videos before, things look pretty different. This is not the usual setup that I have going on. And that is because I moved apartments, guys. So I'm in a new spot now, which obviously means a brand new setup, but I'm still keeping it real. I'm still here at my dining room table. That's pretty much it. Nothing super crazy. So let me know if you guys like this new setup. I'm hoping it's going to be a little bit brighter. It looks a little bit cleaner. Not as much crazy stuff going on in the background as the last place. So yeah, let me know what you guys think of the new setup. All right, guys, now that we've gotten that out of the way, let's get into some of these stocks. And the very first one that I want to talk about needs no introduction. You guys know this company, you guys know this stock, and that is Pepsi, ticker symbol PEP. Now, obviously Pepsi, guys, is like one of the most iconic, recognizable companies, recognizable brands in the world, and they have such a long history. They've been around since 1898. And you guys may know them for their soda, for their Pepsi Cola, but there is so much more to Pepsi than just their sodas, guys. They have a whole roster full of great snacks and foods and other beverages. They have a very diverse lineup. And if we jump over to the screen right now, there is a lot going on with these Pepsi brands. So in addition to their soda that we all know and love, Pepsi also owns other famous, iconic, huge brands like Lay's potato chips, Doritos, Mountain Dew, Gatorade, Tropicana, Quaker Oats. Do I even need to list them out? Let's just look at all of these. Just take a look. Take it all in. You guys, most likely, at least if you're living in the United States, you probably recognize most of, if not all, of the products on this page. And these are just some of their top featured global brands. If we jump over to beverages, we can see more of the beverages they have that include Pure Leaf Tea, Bubbly. These are pretty good. Have some in my fridge. Scrolling back up, let's jump over to food and see some more of their snacks. So in addition to Lay's potato chips and Doritos, they also own Stacy's pita chips, which I also have some of these in my pantry over there. Quaker Oats, big oatmeal guy right here. Ruffles, Sabra, hummus. I'm not a big hummus guy. I'm not gonna lie to you guys. This Smart Food popcorn, I grew up eating this stuff, guys. Actually, my mom is hooked on this popcorn. It's probably her favorite snack if I had to guess. But let's just scroll down. Take a look at all these guys. Cheetos, Tostitos, Fritos, Sun Chips, Miss Vicky's, Rolled Gold, Cracker Jack, Funyuns. Oh my gosh, I love Funyuns. Guys, my mouth is just watering going through all of these. Captain Crunch, Munchies. Anyway, you get the gist of it, guys. Pepsi has just got it going on. They have such a diverse lineup of beverages and snacks. And all of the brands that they own are just heavy hitters. It doesn't get any bigger than like Gatorade and Lay's and Doritos and Cheetos. Just tons of different snack and beverage monsters, guys. And these are items that really never go out of style. Obviously, Pepsi's been around for such a long time, over 125 years. Lay's, Doritos, I mean, like I said, guys, these snacks that they have are just probably the biggest in the industry. They're the most popular. Anytime you go to a Super Bowl party, what chips do they have? They've got the Lay's, they've got the Doritos. They haven't gone out of style, doesn't seem to be like they ever will. And because of this, I think it makes Pepsi a very investable company right now and also for the long term. This is one of those stocks that you just buy it, you don't have to worry about it because people are always going to be eating Lay's, they're always going to be drinking Pepsi, eating Doritos, eating oatmeal even for those who are on the healthier side, drinking Gatorade, there's always going to be athletes doing that. So the repertoire of brands that they have are just impossible to duplicate and kind of creates a certain moat for Pepsi in my opinion. And moving on, let's jump into some of the numbers that Pepsi is putting up and see how they're doing. All right, guys, so as you can see on the screen, Pepsi is currently sitting at 156.02 per share, and it's actually been performing pretty well. So jumping back 10 years, it's up 125%, over 125%. In the last 5 years, it's up about 40%. In 1 year, it's up over 16%. 6 months, a whopping almost 10%. That's crazy. And then just in the last month, in the last 30 days, it's up 4.5%. What's crazy too is even despite Pepsi's, pretty substantial gains in share price, the PE ratio is really not too out of whack, especially for a company of this size. The PE ratio is sitting at about 25. So you guys have heard me say this before, but typically if a stock is like at a value or at a discount, kind of the sweet spot you want to see the PE ratio is under 20. But like I said, for a company of this size, a PE ratio of 25 is really not too bad. Now let's jump over to this growth page real quick. Okay, great. So as you guys can see on the screen here, the revenue growth for Pepsi has been really awesome too. Year over year, it's gained 10.25% in revenue. In the last 3 years, it's up a compound 5% in revenue. 5 years, up about 3.75%, 3 3/4. And then over the last 10 years, this maybe isn't too great, but it's up 1.8% in revenue. So what does this mean, guys? I mean, year over year, these numbers are obviously pretty dang impressive. Even the last 3 years, I don't think that's too bad, but it starts slowing down when we look at these 5-year numbers and 10-year numbers. But the important thing is that Pepsi is still continuing to grow. They're still continuing to expand, and they are still continuing to increase their revenue as the years go on. All right, guys, now let's go talk about their dividend real quick. If we jump over to the dividend scorecard, we can see here that Pepsi has a forward dividend yield of 2.77%, which is neither here nor there. It's not too high, it's not too low, and it's really not of any concern, at least to me, considering how long they've been growing it for, while we're talking about it. They've been growing their dividend for the last 49 consecutive years. All right, now jumping over to this 5-year growth rate, 7.69%. is actually a little bit higher than what I was expecting. To me, when I see a company that has been growing their dividend for as many years as Pepsi has, almost 50 years straight, I would have expected to see this number be a little bit lower actually, maybe in like the 3 to 4% range. But really, guys, if we're looking for stocks that we can buy and hold for the long term, potentially forever, this is a very important number to us. So if this company has been able to not only sustain their dividend for 49 years, but grow it, it doesn't raise a lot of red flags to the investor, at least not to me. They've done this for so long, they've got it dialed in, they've got a good system going. And unless something dramatic happens, they'll probably continue to grow this dividend, especially when you consider all of the great snacks and beverages, everything that we just talked about for Pepsi a moment ago. I think this dividend growth trend will continue. All right, guys, now scrolling up, one of the last questions I want to try and answer with Pepsi is it a good time to buy right now? And we've already talked about the PE ratio, about 25, but let's scroll down and look at the price to book and price to cash flow. So I've covered this in a previous video, but price to book you wanna look for as close to 1.0 as possible, and price to cash flow, you want it to be in like the single digit range. So price to book for Pepsi is pretty high. It's about 12.5. And then price to cash flow is also pretty high, maybe about double where we would like to see it. Based on that, it doesn't seem like it's too affordable to buy right now. So is it a good time to buy Pepsi? I think it's probably always a good time to buy Pepsi. I think if you're buying it with the intent to hold it forever or as long as you can, you might as well just get into it as soon as possible, especially if you consider across 10, 20, 30, 40 years. You can imagine that in that period of time, the stock's gonna be more expensive than when you bought it today. All right, guys, moving on to stock number 2 today. This is another one that you have undoubtedly heard of. You guys are probably already very familiar with this stock and with this company, and that is Microsoft, ticker symbol MSFT. Now, as far as consumer technology companies go, Microsoft is just an absolute beast. I mean, it's probably fair to say the only other real competitor is going to be Apple. But the more research I do into Microsoft, the more I look at it, the more I think it has an edge, to be honest with you. Microsoft just has their hands in pretty much every aspect of technology, from hardwares like phones, computers, the Xbox, which is obviously, I mean, we could make a whole nother video on just what's going on with Xbox and how big that is. They also have Microsoft Surface, which does really well, to softwares like their operating system, the Microsoft Office Suite, Microsoft Outlook for email, Microsoft Teams, which has become a really big platform in the last year and a half. And last but not least, Microsoft OneDrive, which is their cloud computing application. I mean, the cloud is becoming everything these days. And the thing about about all these products and all these solutions that Microsoft creates is that they are used pretty commonly by both consumers and people for business, which means that these applications, these products that they create can be used by pretty much everyone for a myriad of different reasons. And because of this, guys, especially as we progress into the future and all this stuff becomes, I mean, it's already a huge part of our lives, and it becomes even more ingrained in our lives, Microsoft's gonna be at the forefront of a lot of that. Now, moving on, guys, let's jump over to the screen and talk about a little bit of the numbers behind Microsoft. All right, guys, so starting off, Microsoft is currently sitting at $281.90 per share, which is pretty up there as far as buying one share of a stock goes. And Microsoft's performance is like off the chart. So if we go back 10 years, it's up almost 1,000%. I mean, look at that slope, that's crazy. Last 5 years, still up a just buttload, guys, 423%. If we move over to this 1 year mark, they're up 35% just in the last year. Last 6 months, 32%. So a lot of that last year's growth came in the last 6 months, it looks like. And then just in the last month, guys, Microsoft is up 8.77%. Have you ever seen that before? Probably, but it doesn't happen very often. So Microsoft is just crushing it as far as appreciation goes. It is performing very well. And if you're invested in Microsoft, you're probably a very happy camper. And if we move over here, we can see that the PE ratio of Microsoft is 36.2, which is really too high to be considered affordable. But at the same time, Microsoft does have a tendency to appreciate very well, which is why we're seeing this PE ratio so high. And just considering its recent growth history, guys, just answering the question right now, is it a good time to buy Microsoft at this time, considering everything we just said? And I don't know, I'm personally holding off to buy into it till it gets a little bit more affordable, hoping for a little bit of a market correction so we can see some of this stuff coming down. But it's a company that I would love to buy into. Like I said, it's on my watch list, it's on my radar. It's probably going to be one of the next couple of stocks that I start building a position in, pending a correction. I mean, I don't want to predict anything I don't have enough knowledge to, but let me just leave it at this, guys. If Microsoft were to come down in price quite a bit, I would definitely jump on it. Absolutely jump on it. All right, guys, now let's scroll down a little bit here. I want to show you their revenue. So we won't get too much into these numbers, but this is their revenue growth year over year. And going back to 2016, just look at how much their revenue grows year over year. So 91 billion in 2016, 96 the year after, 110 the year after that, and then fast forward that to now, 185 billion, which is 75 billion more than they were doing in revenue 3 years ago. Insane amount of revenue growth, guys. Which makes me wonder, guys, when you look at this, like, oh my gosh, seeing this, the trend is just upwards and onwards. Because of that, it makes me second guess what I just said. Well, shoot, I mean, are we missing out by not investing today? Because it just looks like it's on a dramatic upward trajectory, but I don't know, it's hard to say. Let me know what you guys think about this in the comments below. Is Microsoft a buy today, or do you think it's too expensive? All right, guys, now scrolling up, let's jump over to this profitability page real quick and look at these two numbers right here. So Microsoft's net income, which is this right here, is 35%, which is absolutely unreal. Essentially what this means, guys, is like for every $100 that they do in revenue, for example, they're keeping 35 of that. For most companies, you don't see that net income too high. So bravo to Microsoft for staying so profitable. All right, guys, now let's jump over and talk about Microsoft's dividend real quick. So just starting off, guys, their dividend yield isn't too high, 0.8%. I believe it used to be higher, but I think that the appreciation in share price is kind of throwing that out of whack. At any rate, their payout ratio is a little bit low, just under 30%, which to me means, yes, they're paying dividends to their shareholders, but they're very focused on continuing to grow and expand the company, which is just fine. There's nothing wrong with that, especially, and this was the case with Pepsi too, especially if the intent is to hold your position in this company forever or as long as you can. You want to see them allocating funds to growth, and that's, you know, it's very important. Anyway, moving on, the 5-year growth rate of their dividend is 9.52%, which is nice. I like to see that. That's a good amount of growth. This means that although the dividend yield is currently pretty low, over time, if you guys stay patient, it's gonna get up there. And Microsoft has a pretty solid track record as far as dividend growth. So if we go over to this dividend history here, we can see that they've both been growing and paying their dividends for the last 17 consecutive years. If we stretch this chart out real quick, this is what we want to see, just an upward slope of their dividend, which really doesn't look all too much different than the upward slope of their revenue. All right, guys, moving on to stock number 3. We are talking about a company that is my favorite place, and possibly yours as well, to pick up some odds and ends, go home shopping, look for groceries, buy cat food, you name it. You can go to this place and find whatever you need, and that is Target, ticker symbol TGT. Guys, I'm not even exaggerating. I'm probably at Target like once, twice, sometimes 3 times a week. If I don't go, my girlfriend is there. In fact, we were there yesterday buying stuff for the new place, and it's always popping. There's always people in Target. There's people like right even before they open, I've been, and there's people outside the door waiting to get in. They're ready to shop. And like I said, guys, at Target you can pretty much buy everything you need. They have everything from home goods to clothes to electronics to groceries. It's very much like a Walmart, but in my opinion, Target is a little bit cleaner. I think it's got a better brand. I actually also think it's got a better reputation. I would guess, and correct me if I'm wrong in the comments below, but I would guess most people would prefer to go to Target over Walmart if they had the choice. Like I said, to me, it just seems like an all-around more friendly place to go. One of the cool things about Target too, and Walmart does this as well, but Target links up with some other big companies like Starbucks, CVS Pharmacy. They have these in a lot of Target stores. You can go in, actually order Starbucks. You can pick up your pills. It's just a good way to draw more customers in. You know, maybe you're going for a latte and then you might as well shop around while you're there, pick up some odds and ends for around the house. Anytime you go to Target, guys, you're just gonna end up shopping around and find things you didn't even know you needed. It happens all the time. And with that said, let's get into some of their numbers and see how that breaks down. So looking at the screen here, guys, Target is currently $252 per share, which is also right up there with Microsoft, a pretty pricey stock to buy. And as far as performance goes, in the last 10 years, it's up almost 400%. Okay, in the last 5 years, it's up a whopping 246%. In the last year, it's up almost 108%, which is crazy, guys. If you would have bought it back in, what is this, July 15th, 2020, it was $121 per share. That is an insane return. If you guys bought Target like at this time or even before that, bravo, like hats off to you guys. That was a good call. In the last 6 months, Target is up almost 30%, which is also really nice. And then in the last month, just like Microsoft, they're up almost 9%, guys. Like who does this? Where is this even coming from? And looking at their PE ratio right here, guys, it's really not that bad. Especially when you consider how much the share price has grown in the recent history. 20.55, that's actually a relatively low PE ratio, and it kind of indicates some affordability for this stock. So it may actually be one to consider adding to your portfolio if it's on your watch list right now, just based on this PE ratio here. And if we jump over to this growth page, scroll down a little bit, they've done pretty well in terms of revenue growth too. So year over year, their revenue has grown by 22.5%. In the last 3 years, their revenue has grown 10.23%. In the last 5 years, 6.14%. And in the last 10 years, 3.78%. Now, if we scroll up, let's jump over to their dividends and talk about that real quick, guys. So scrolling down here, Target has a forward dividend yield of 1.42%, which is a little bit low, but if you stay patient with it and hold it for the long term, you will most likely be rewarded. Their payout ratio is 30%, which to me means that they are continuing to put more into growing the company. The 5-year growth rate is actually pretty low, just under 4%, but they have been growing their dividend for a long time. 53 years of consecutive dividend growth, which, as I've said before, is what we like to see, especially if we're gonna be holding it for the long term, guys. It just indicates a lot of reliability, a lot of sustainability, and those are the type of companies you want to buy into if you kind of wanna just buy and set it and forget it. All right, guys, now moving on, the next company we are gonna be talking about is arguably probably the best long-term hold, and that is Procter & Gamble, ticker symbol PG. This is one of my favorite stocks to buy, one of my favorite companies to invest in, and that is because it is so reliable. The thing I like most about Procter & Gamble, and other companies in this space do this as well, like Kimberly-Clark and Clorox, but Procter & Gamble makes products that people just need. They're never gonna not need these products. And these are products like toilet paper, like diapers, toothpaste, floss, laundry detergent, all this stuff. And when it comes to Procter & Gamble, the brands that they own are, like Pepsi, some of the biggest in the industry. So if we jump over to this brands page here and just scroll down, guys, we have them all pulled up. In baby care, they have Luvs and Pampers. Scrolling down, fabric care, they have Bounce, Cheer, Downy, Gain, Tide. Family care, which so paper towels, they have Bounty. Toilet paper, they have Charmin. Scrolling down, feminine care, they have Always, Tampax, very big names, guys. Grooming, they have Braun, Gillette, which Gillette's probably gotta be the most popular shaving brand out there. Gillette Venus for women. Hair care, they have Aussie, Head and Shoulders, Pantene, Old Spice, Herbal Essences, My Black is Beautiful. Home care, Cascade, Dawn, Gain, Febreze. Just look, I mean, Crest, Oral-B, Scope, biggest names in dental care. It just doesn't get any better than the brands that Procter & Gamble has. And you guys looking at all these, you know that people are always gonna need this stuff. They always need toothpaste. People always need laundry detergent, deodorant, you know, shampoo, conditioner, shaving cream, you know? Like these are just all things that people are gonna need throughout the rest of time. So there's just an everlasting need for the products that Procter & Gamble makes, which means that there's gonna be an everlasting demand for this company. And just to reiterate, guys, this is exactly why I love investing in this company so much. I think every dividend investor should have at least one of these types of companies in their portfolio, whether it's Procter & Gamble or Kimberly-Clark or like a Clorox, something like that. And it's for this reason exactly that I'm working on building my Procter & Gamble position in my own portfolio and hoping to make it a core stock in my own portfolio. I wouldn't mind this stock being 9, 10, 11% of my entire portfolio. Maybe not 11, but I wouldn't mind it being like between 8 and 10%. Anyway, getting into the numbers, guys, Procter & Gamble has a current share price of $140.42. And as far as its performance goes, in the last 10 years, it's up 100%. In the last 5 years, it's up 61%, which is nice. In the last year, it's up 11%, which is, I believe, the lowest we've seen all day, right? But still, 11% is nothing to scoff at, guys, especially when you consider the market average across time is what, like 6 to 8%? So it's still above that. In the last 6 months, it's up 3%. In the last 1 month, it's up 3% as well. And surprisingly, guys, Procter & Gamble has a higher PE ratio than what we saw with Target, which was only 20. But Procter & Gamble's PE ratio is 24.72, which is still not entirely too high. And this is a pretty big company as well, $337.8 billion market cap. I personally, guys, like I'm buying Procter & Gamble right now. I'm gonna be buying it in the future as well. Do what you want with that information. I'm just letting you know where I'm at. But, you know, I always think Procter & Gamble is a good stock to stock up on. And I'll tell you what too, just jumping back over to the share price appreciation, it obviously hasn't appreciated as much as, or as rapid as some of these other companies, but that's fine, guys. Procter & Gamble is known for not being a very volatile stock. In fact, a lot of these consumer staple stocks don't come with a lot of volatility, which is good for us. Like that's what we want when we're looking for long-term investments, things that we can rely on. We can always count on them to be growing slowly but surely, but we can always count on them to be there and grow and pay us a dividend. Which brings me to the next point, guys. Let's jump into Procter & Gamble's dividend real quick. So scrolling down, they have a current dividend yield of 2.5%. A payout ratio that's actually really not too bad, 61.82%, a 5-year growth rate that's really not too bad as well, considering how many years of consecutive dividend growth they have. 4.05% growth rate and dividend growth of 64 consecutive years, which is the highest we've seen all day. Procter & Gamble is probably the king of dividend kings, and I can't say it enough. It's like one of my favorite companies to invest in. I love buying Procter & Gamble. With that said too, I also love buying high yielding stocks like AT&T, but as far as reliability goes and long-term investments, it really doesn't get any better than this. All right, guys, the last stock we're gonna be talking about today is a company that I grew up going to. Another timeless classic. We have McDonald's, ticker symbol MCD. I think it's safe to say, guys, that at this point in time, the majority of people, at least in the United States, have grown up eating McDonald's. Like me personally, I most definitely did, and when I would go there, I would get the same thing every time. I would always get a 10-piece chicken McNugget and an M&M McFlurry with extra M&Ms. That was always my go-to order, and today if I went there, I don't go to McDonald's that often anymore, but if I were to go there today, I would probably get the same thing. In fact, I probably would get 2 10-piece chicken McNuggets and an M&M McFlurry with extra M&Ms. I'm a hungry guy. Anyway, in addition to McDonald's food just being really delicious and also very easy to access considering it's fast food, there's so much nostalgia built into this company. And if I'm right, and if the majority of people, at least in this country, grew up on McDonald's, it's one of those things that you pass on to each generation. So my parents grew up going there. You know, I'm sure that my grandparents went to McDonald's when they were younger too, and it's something that has been passed on to future generations. Person goes to McDonald's, they end up taking their kids, they end up taking their kids, so on and so forth. And in addition to what we've talked to so far, one of the other reasons I think McDonald's is a really good long-term play, and a lot of people actually don't know this about them, is that it's a really good real estate play. And to elaborate, I'm gonna read from this article that I found online talking about the subject. So going over here, if we scroll down, let's read this paragraph right here. So McDonald's owns thousands of iconic pieces of real estate around the globe. From New York City's Times Square to Moscow's Red Square, McDonald's has ventured around the world buying up prime real estate. Franchisees pay McDonald's a cut of their food sales, but a much larger portion of McDonald's revenue comes from the rent it's paid on real estate. After all, rent in Times Square isn't cheap, but a Big Mac is. McDonald's still takes a royalty on its franchisees' sales, but enjoys a much fatter revenue stream from the leases on nearly 33,000 franchisee-owned restaurants. The Founder, a 2016 film about McDonald's history, explains the dynamic succinctly. You don't build an empire off a 1.4% cut of a 15-cent hamburger, you own it by owning the land on which that burger is cooked. Couldn't have said it any better myself, guys. And actually, if you have not seen that movie, it's worth a watch, it's pretty good. Michael Keaton. All right guys, now let's go over some of their numbers. McDonald's is currently sitting at about $236 per share, okay? In the last 10 years, they're up 177%. In the last 5 years, up 91.5%. In the last year, up a whopping 23.52%. In the last 6 months, up about half that, about 13%. And then just in the last month, they've kind of stayed flat, up 0.22%. And with a forward PE ratio of 27.4, one has to wonder, is it a good time to buy McDonald's right now? It's tough to say. I mean, obviously the share price continues to go up. So, you know, is it worth it trying to, you know, time the market, wait it out so the price drops a little bit? I can't really say, but if we scroll down here, guys, you know, their revenue seems to be kind of all over the place. So, you know, you can see it kind of starts to go down, then it goes up, then it goes down. Now it's starting to look like it's going up and up. So, you know, I'm not really sure. It's kind of all over the place there. If it was just going straight up like what we saw with Microsoft, then we might be more inclined to invest in it at any price. But I don't know with this one, guys. I would actually appreciate your feedback in the comment below. What do you guys think? Is McDonald's a buy right now? And if we jump over to the dividend page real quick and scrolling down, we can see that McDonald's has a current dividend yield of 2.18%, okay, which is, you know, we've seen higher, but that's not too bad, okay? A payout ratio of almost 60%, which is right in that sweet spot, okay? So that's looking good to me. A 5-year growth rate of 7.78%, which in my opinion is neither too high, it's neither too low. It's a good happy medium, and when it comes to long-term sustainability, you want that happy medium. You don't want anything that's gonna, like a super high yielding dividend stock that's just a yield trap. You want something that's manageable, you want something that's sustainable. And this growth rate seems to be there. And even though their dividend yield is not super duper high, the growth rate is acceptable. So with some patience and with some time, that 2.18% will continue to grow. Moving on, McDonald's has been growing their dividend for the last 12 years, which we have definitely seen higher. But if we go over here, we can see that they've been paying their dividend for 44 consecutive years, which is a long time, guys. 44 years of consecutive dividend payments is pretty reliable. And when it comes to investing in companies for the long term, we want to see this. It would be nice to see a company of this magnitude, of this popularity, have a longer amount of dividend growth, but at least they've continued to make their payments for almost 45 years, and hopefully this trend will continue in the future. All right, guys, well, those were 5 of some of the best stocks that you can buy and hold forever. Now, obviously, there's a lot more stocks that we could have talked about. Like some honorable mentions include Johnson & Johnson, Apple, Kimberly-Clark, Clorox. You could maybe even possibly throw Starbucks on that list. I love Starbucks. But at any rate, these are companies that have proven track records of reliability. Also, if you guys have not done so already and are still with me here at the end of this video, please, if you wouldn't mind just taking half a second and going and hitting the thumbs up button for me, I would really appreciate it. That would dramatically help me get this video pushed out to other people here on YouTube who are looking for some good long-term investments for their dividend stock portfolios, just like you and me. And if you enjoyed watching this and aren't sick of me yet, guys, why don't you mosey on over to that subscribe button as well and hit that for me too, so you can stay up to date on all future videos. All right, thank you so much for doing that. And with that said, I will now get out of your hair. But thank you guys once again so much for watching this video. I really appreciate it. Hope you guys have a good day, and I will see you in the next one.